Welcome to the Deep Dive, where we sift through a stack of information, pull out the most important nuggets, and deliver surprising insights to help you get truly well-informed, fast.
And today, we're honing in on one specific company.
That's right, a specialized deep dive today. We're focusing on a company that's absolutely critical, yet often unseen in the world of semiconductors.
A key player behind the scenes.
Exactly. We're going to unpack Axcelis Technologies, Inc., trading under the ticker ACLS.
ACLS, right.
This company makes the incredibly sophisticated equipment that helps build the very microchips powering so much of our digital world, from your smartphone to AI data centers.
It's fundamental stuff.
Absolutely. So our mission today is to go beyond the basic headlines. We want to explore their financial health, delve into their competitive advantages, and lay out the challenges they face.
So you can truly understand what makes this business tick.
And why it matters to the broader tech landscape. Okay, let's unpack this. What exactly does Axcelis Technologies do?
Well, think about making a microchip. It's like building this tiny, incredibly intricate city on a silicon wafer.
Okay.
Axcelis builds the precision machinery for a key step, ion implantation.
Ion implantation. So they're basically shooting atoms.
Pretty much. Electrically charged atoms, ions, into these silicon wafers. And this process, it fundamentally changes the electrical properties of the silicon.
Creating the circuits that make the chips work.
Exactly. It's a fundamental, highly technical, and frankly indispensable step in chip fabrication.
Based out of Beverly, Massachusetts, right? About it quite a while ago.
Yeah, way back in 1978, so they've been around.
And what's special about their approach?
Yeah, and what's really interesting about them is their specialization within this process. They offer different types of implanters: high energy, high current, medium current.
Tailored for different needs in chip making.
Precisely. Different chips like power devices or memory chips need different implantation steps. But it's not just selling the machines.
Right, you mentioned something else.
Their aftermarket business. It's significant. Providing parts, critical upgrades, ongoing services.
Like the razor and blades model almost?
Kind of, yeah. Think of it like a printer company selling the printer, but also the ink and maintenance. It ensures this stable, recurring income stream from their existing customers.
Which makes their revenue more resilient, I imagine.
Surprisingly resilient, yeah, even when new equipment sales slow down.
Okay, so let's look at the numbers. The snapshot in our sources. Market cap around $2.48 billion.
That's right, roughly $2.5 billion.
Last close price noted was $79.07, and that 52-week trading range. Wow, $40.40 up to $117.09.
Yeah, quite a range. It really shows the volatility, doesn't it?
It does. Points to how dynamic this whole semiconductor sector can be.
Absolutely. But zooming out a bit, their balance sheet is notably strong. That's a key insight here.
Strong how? Lots of cash.
Loads of cash. They reported $549.84 million in cash and short-term investments. And get this, remarkably low total debt, just $43 million.
Wow, okay, so net cash positive.
Very much so. That nets out to a very healthy $506.84 million in net cash.
And the debt-to-equity ratio must be tiny.
Tiny. A mere 0.04.
So what does that signal, really? Good health, obviously, but
It signals immense flexibility. A company with this much cash and so little debt can weather economic storms, right?
Sure.
They can invest heavily in R&D, maybe pursue strategic acquisitions, all without much financial strain.
it gives them a strong foundation, especially in a cyclical industry.
Exactly, to navigate those market fluctuations.
Okay, that's a picture of solid financial health. But how's that translated into recent performance? I mean, the real test is the current market, isn't it?
It is.
So what did Axcelis' second quarter 2025 results, the ones from August 5th, really tell us?
Well, that brings up a critical point. Axcelis did deliver solid operational performance. They actually exceeded their own outlooks.
Okay, so good news then.
Yes and no. Revenue came in at $195 million, and non-GAAP diluted EPS was $1.13. Both beat their guidance.
I sense a but coming.
But the underlying metrics, they reveal a challenging cyclical environment. You have to put it in context.
How so?
That Q2 2025 revenue, $195 million, it's actually a notable decline compared to Q2 of the previous year, 2024.
Year-over-year decline. How much was it in Q2 24?
It was $256.5 million then, so a significant drop.
Okay.
And here's where it gets particularly insightful. Bookings for the quarter. They stood at $96 million.
$96 million in new orders.
Yeah.
Against $195 million in revenue shipped.
Exactly. which gives you a book-to-bill ratio of 0.8x.
0.8x. So
Okay.
for those listening who don't track this daily, what does that actually signify?
It's a really important indicator in this industry. A book-to-bill ratio below 1.0 means new orders are coming in slower than products are being shipped and revenues recognized.
Right. Less fuel going into the tank than is being burnt.
Precisely. It's a clear signal that customers are pulling back on spending. They're still digesting or, using up the capacity they already installed.
So it's not just a blip for Axcelis, it's reflecting the broader industry cycle.
Absolutely. It's a classic sign of an industry-wide slowdown in capital expenditure. Axcelis is feeling the full force of this.
Right. And how a company manages this dip often matters a lot long term.
It really does. Cost control, maintaining the tech edge, that sets the stage for the rebound.
So feeling these headwinds, what are they forecasting? How are they guiding for Q3 and Q4?
Okay, looking ahead, management gave non-GAAP guidance for Q3 2025. They expect revenue around $200 million.
Slightly up from Q2 then.
Slightly up, yeah. And diluted earnings per share around $1.
Okay. And margins.
They expect gross margins to dip slightly to around 43%. They said it's due to a less favorable mix of systems revenue.
Meaning more new machines, less high-margin service and parts.
That's generally the dynamic, yes.
Yeah.
In the initial view for Q4, they suggested similar levels for revenue and gross margin.
It is interesting how they're navigating this, though. You mentioned strong execution, cost control,
They emphasize that, yes.
Yeah.
Disciplined cost control.
and they bought back shares.
Yeah.
$45 million in Q2.
They did, which is quite a move during a downturn.
Why do that? Why buy back stock when things look softer?
It's a great question, and it's quite telling, actually. Share repurchases often reflect management's strong confidence in the long-term fundamentals.
So they think the stock's undervalued relative to the future.
That's usually the signal, yes. Even during a downturn, they might see value where the market just sees current challenges. They're essentially saying, we believe our stock is a good investment right now.
Okay, interesting signal. Now, we've seen the current state, the financials. But what about their staying power? How does Axcelis actually protect its business long term?
That takes us to their competitive edge, their moat.
Right. Our sources mention a narrow economic moat. Can you unpack that? What does narrow mean here?
So an economic moat means sustainable competitive advantages, like a castle moat protecting it. Narrow suggests these advantages are significant, real, but maybe not completely insurmountable forever, unlike a wide moat.
Got it. So what gives Axcelis their narrow moat?
It's primarily driven by two things: strong intangible assets and high customer switching costs.
Intangibles like patents, technology.
Exactly. Proprietary technology, patents, deep know-how. They have clear market and technology leadership in high-energy ion implantation.
Which is critical for certain advanced chips.
Absolutely critical,
Yeah.
especially in silicon carbide, SiC devices. That's a big growth area. Their proprietary linear particle accelerator tech, for instance, is a real differentiator.
And the expertise needed, it's not easy to replicate.
Not at all. The deep technical expertise, the years of knowledge required, it creates significant barriers to entry for potential new competitors. You can't just decide to build these machines tomorrow.
Okay, that makes sense. Like a secret sauce, only a few understand. You also mentioned high customer switching costs. Why so high?
Well, once a chip fab installs Axcelis's complex ion implanters.
These are multi-million-dollar machines integrated into huge production lines, right?
Exactly. The sheer expense, plus the operational disruption of ripping one out and switching to a different vendor for service, upgrades, spare parts, it's substantial.
So inertia is a powerful force here.
Very powerful. You see this clearly in their Customer Solutions and Innovations, or CS&I, business.
That aftermarket part we talked.
Yes. It's a foundational, incredibly resilient revenue stream. About 30% of total revenue in the first half of 2025, and with materially higher gross margins.
So that ensures stable income from existing customers, buffering downturns.
It's a crucial buffer, yes. A revenue stream that doesn't just vanish when new equipment sales dip.
That clarifies it. It's the whole ecosystem, not just the initial sale.
Yeah.
Okay, stepping back, what about the bigger picture? Long-term trends that could really boost Axcelis.
Looking at the broader trends, yeah, the long-term tailwinds are quite compelling.
Like what specifically?
The big one is the growing adoption of silicon carbide, CCC.
For electric vehicles.
EVs, renewable energy infrastructure, next-gen AI data centers. It's a huge driver. And Axcelis's high-energy implanters are an enabling technology here.
You can't make the advanced SiC chips without them.
Pretty much. And they're not standing still. They're actively developing solutions for even higher voltage cyclicality applications, pushing the envelope.
What else? Any other areas?
Well, they're also securing orders for 28 nanometer applications in China. That's a more mature technology node, but still very important globally.
And memory chips. That
Well,
market's been weak.
it has been muted, yeah. But new DRAM capacity is expected to come online maybe late 2025 or early 2026, especially driven by high bandwidth memory, HBM, for AI.
Ah, the AI demand again.
Right. And Axcelis is positioning itself strategically for that. Plus, they just announced a joint development program with GE Aerospace.
GE Aerospace.
For what? High voltage superjunction power devices. It points towards future innovation, diversification into new, potentially high growth markets.
Okay, so strong long-term prospects. But every investment has risks. What are the key challenges people should be aware of with Axcelis?
Yeah, definitely risks to consider. Ongoing macroeconomic uncertainty is one, obviously. And as we discussed, the current cyclical demand softness.
That 0.8x book-to-bill.
That's a clear signal, a point of concern. It shows continued customer capacity digestion, particularly in China's mature node market, but also memory and general markets.
And China's a big part of their business, isn't it?
Huge. 55% of total revenue in Q2 came from China.
Wow, over half. That brings market-specific risks, geopolitical risks.
Definitely tariffs, trade relations, that's always a factor. And we also see that gross margin pressure.
Right, the slight dip guided for Q3.
Yeah.
From 45.2% down to 43% non-GAAP.
Yeah, driven by that product mix shift. Lower profitability per dollar of revenue, even if slight.
Okay, so putting it all together. Strong moat, good long-term trends, but current cyclical issues and risks, especially China concentration and margin pressure.
Right.
What does this mean for the stock price?
That's the million-dollar question, isn't it?
Our sources show the share price around $79.77 recently. But they also highlight a fair value estimate of $63.74 and an analyst's average target of $75 in the last 6 months.
Yeah, those numbers tell a bit of a mixed story. Suggests the market's quite divided on the valuation right now.
How do the bulls and bears frame it?
Well, the bull case emphasizes that strong market leadership, the compelling secular tailwinds from sexy and AI.
The resilient, high-margin CS&I business.
Exactly, and that robust financial health we talked about. Bulls see the current price as justified, maybe even understating the future potential.
And the bears.
The bears point directly to those near-term cyclical headwinds, the ongoing capacity digestion, and the valuation itself.
Arguing the price already reflects future growth.
Or maybe even over-reflects it. They'd argue there's downside risk if growth expectations aren't met, or if this downturn is deeper or longer than expected. It's that classic tug-of-war.
Present challenges versus future potential. So there you have it. Axcelis Technologies, a company with a strong competitive position, compelling long-term growth drivers like SiC,
But undeniably navigating that cyclical softness right now.
and a valuation that seems to reflect some pretty high expectations for the future.
So what stands out to you when you consider a company like Axcelis? Is it its critical, almost hidden role in this foundational but cyclical industry?
Or maybe it's robust financial health and that deep competitive moat, helping it weather the storms.
It's always about weighing those different perspectives, isn't it? Deciding what holds more weight for your own understanding.
Absolutely. We hope this deep dive helped you gain a clear and concise understanding of Axcelis Technologies.
I hope it was useful.
And if you found this deep dive valuable, make sure to subscribe and hit that bell icon so you don't miss our next deep dive into a topic that helps you stay well informed on this channel.